this is Nick from Income Digs. Welcome to this video tutorial. We're talking about QuickBooks today, and I'm going to be showing you a technique that will hopefully save you a lot of time. Okay, so when we're in QuickBooks, it's very common to want to adjust your approach for some reason. Okay, maybe your business is shifting a little bit, maybe you learned a new strategy, a new technique, maybe you're taking the real estate accounting boot camp and you want to change the way that you're tracking to fit what we teach in the boot camp. Okay, so we might want to make an adjustment to how we're tracking our books. Now, QuickBooks does not have a bulk edit feature. It's notorious for lacking this feature, okay? So we are often thinking, well, if we need to go back and change our transactions, maybe we need to put transactions to a different account, maybe we need to track to class versus customer, we got to go back into every single transaction and make those adjustments, which is extremely time consuming. And honestly, we all have a lot better things to do with our time. Okay, so I'm going to show you a technique today. I call it the Reconciling Journal Entry, or almost like the Fix-It Journal Entry. And this is a technique that you can use to kind of get your books into a new strategy. And I'm going to demonstrate it today with a set of books that's using customer to track property-specific transactions. And we're going to transition that whole thing over to classes. Okay, so let's get into QuickBooks. Let me show you what I'm talking about. So right now I have a P&L. Now I'm in 2016. I'm recording this in 2020. I'm just in 2016 so that I have like a really defined report that I can look at. And I have this little P&L, and I'm actually currently tracking my P&L, profit and loss, with my property being the customer. So if I were to go into these transactions, you will see that I currently have, oops, I just got rid of the whole thing. There we go. Okay, so I currently have an expense, and that is tagged to a customer here. That's how I'm tracking my property. Okay, now notice my class is blank, right? So this is a set of books that in 2016, for demonstrative purposes, we are tracking to the customer. Now let's say that you're going through the boot camp maybe, and you decide that you want to switch it to class so that you can maybe start invoicing your tenants using the customer field. Okay, that's pretty common. And I always say, like, customers, classes, they both work, they both have benefits, but maybe you want to transition to doing classes. Now, you might think, okay, well, now I got to go back in time and go to every single transaction, of which there could be, and there probably are thousands, and update that. So like that transaction I was just in, if you wanted to say, okay, now I'm doing classes, not customer, you can go here and put in your class as 123 Main Street, and then get rid of the customer there. But you'd have to do that for every single transaction. It's going to take you forever. Okay, so I'm going to show you how you use this journal entry technique. Now, what I want to be able to do, right now I'm displaying this P&L by customers. I want to be able to go here to classes, and I want to see my classes up here. But right now I have nothing specified, so it's not currently working because everything's tagged to a customer. All right, so let's say I want to change that. Okay, so the way to do this technique, and you can do it for many different things, is to establish a point in time, stake in the ground, that prior to this date we did it the old way, after this date we're doing it the new way. Okay, once you've established that date and time, and it's usually going to be like year end or a quarter end or a month end, right? Something that maybe let's have last year be that way and this year be this way. Okay, so pick that point in time. Let's say in this case that we're going to say at the end of 2016, that's the old way, and beginning in 2017, or at the very end of 2016, we're going to do it the new way. Okay, so here is how we can do that. First thing you need to do is pull the report up until the last day of the old way of doing it. Okay, so right now I'm saying the end of 2016. Run that report. Okay, got it, run. Now what you have to do is take a snapshot of everything as it is on your P&L, on your balance sheet, whatever you want to change. Okay, so I'm actually going to do that snapshot. I'm actually going to do it with my, I'm going to take the snapshot, okay, and I have it right here. Okay, so now I have this kind of sitting here ready for me to reference. And now what we're going to do is we're going to Now what we're going to do is we're going to reference that screenshot, and make that journal entry. So I'm pulling it back up here. Okay, so I kind of got it off to the side. And we're going to do a journal entry. Now this journal entry is going to be as of the very next day after that reporting period. Okay, so we're going to go new journal entry. Okay, and so because the end of my time period was 12/31/2016, I'm going to do this one 1/1/2017. Okay, and what we have to do is just take the transactions, the total transactions from one account to another. Now, the way to do this, I'm going to start with property insurance, okay? So what we're going to do is do 2 line items for every single account. So I got property insurance and I got property insurance, okay? Now, on the one hand, I got property insurance with name or customer tracked, 123 Main Street. And on the other hand, I have one without the customer, but with the class, okay? I'm moving things over. Now, I am maintaining my location tracking here, so I am going to put those in. If you're not doing business tracking, location tracking, those would be blank. So here's the customer one, here's the class one. I want to take the funds out of the customer one, put them into the class one. Okay, so how am I going to do that? This is an expense. I want to decrease the expense on the one hand, and I'm going to do it by $37.50. Okay, so I'm going to credit it for the customer. I want to take it out of customer, and I want to put it into the one for class. So let's just stop there for a second. Okay, let's just take a minute and see what we're doing here. All right, so right now I have $37.50 total, okay, in property insurance for 123 Main Street as a customer. I'm going to say bring that to 0. I want nothing in property insurance for 123 Main Street as a customer. So here I'm going to credit it $37.50, the exact amount for 123 Main Street, the customer, okay? But I want it to go into property insurance for 123 Main Street, the class. So here's property insurance. I'm going to debit it, increase it, okay, with 123 Main Street, the class. So let's save and close that and see what happens, okay? Now, in this report, 2016, I shouldn't see any difference, right? But what if I did this, 1/1/2017, what's going to happen? Notice that right now I have customers on the top, okay? The funds have moved to 0 here, and now they're unspecified when it comes to customer. If I move this to classes, you can see that it's moved into the right class and not specified as 0. Okay, so I've successfully moved my property insurance to start moving to the class method. Okay, so let's do that for all the others. Now, what's cool about this technique is you don't need to do a journal entry for every single account. You can just do one single journal entry with multiple lines. Okay, so let's do that. Let's do property taxes next. Okay, so I'm going to do property taxes twice. Line for each. Here I'm going to do one with the customer, then I'm going to do one with the class. All right, and I'm going to credit the $53.75 on the customer one. I'm going to debit or increase $53.75 on the class side. Okay, let's do this one down here, $550 in repairs. Okay, so let's put 2 lines, one for each. So one for the customer, one for the class. We have a blank class when the customer is selected. We have a blank customer when the class is selected. We're maintaining the business here for all of them. Okay, so repairs, we have $550. All right. Now I also have income here, right? So I have that $11,250 in rental income. I think that's how it is, rental income, right? So let's put that in there as well. Now, it doesn't have to just be expense accounts. It can be revenue, it can be equity, it could be balance sheet accounts as well. All right, so here's rental income, one for the customer, one for the class. Okay, so now how do we do this one? Now, income, to increase it, we're going to credit it. So this one goes the other direction. Okay, so we're going to debit it from the customer side. So $11,250 here, $11,250 there. Okay, so here I have 1, 2, 3, 4 accounts that I am reconciling. All right, so I'm going to save and close that and see how we end up. Let's go back to my summary report. Here is my profit and loss by customer, and you can see that there's nothing in the customer here for 123 Main Street anymore. It's all not specified, not to a customer. If I move this to classes, boom, everything shows up as 123 Main Street. Nothing is in not specified, okay? So that's how we do it. We do that journal entry, and that journal entry can be large, okay? So that's, that's me moving things from customer to class. What could be some other reasons we'd want to do a transaction like that? One could be that we've been tracking our capital improvements as expenses instead of, CapEx instead of fixed assets. If that's the case, we can make that move as well. So what would that look like? If I were to say, let's go back to my balance sheet 2016. Okay, if I just did an expense, let's say that I spent money and I initially tracked it as an expense for rehab expenses, okay? Cost of goods sold. Now I'm into classes, so let's keep using classes. Okay, let's say that I just did that. That's gonna hit my P&L, okay? Let's just see what my date is. I'm gonna just do, okay. That's gonna hit my P&L. Do I want it on my P&L? I don't know, maybe, okay. Maybe not. There's that $3,000 in rehab costs. Let's say that I want that to show up as CapEx instead, okay. So how do we do that? We do a journal entry as of what time period. Now, usually when I'm doing this for a rehab, I'll do it as of the time that the property went into service. So maybe when the rehab was complete. Let's say that's like 6/30/2016. Okay, so I have my rehab costs as the expense, cost of goods sold. I want to decrease that. Okay, instead, I want it to go into CapEx. Maybe my accountant told me, like, hey, listen, you can't deduct all that. That needs to go on your balance sheet instead of your P&L. Okay, so I can do that. And I've moved it out of my P&L. It's no longer here. It's 0 on my P&L. And then if I look at my balance sheet, I have $3,000 in CapEx. Okay? These journal entries are so useful, right? They're going to save you tons of time. The key is to get your entire balance up until the point you make that journal entry, and then you're able to kind of clear it out and start over. And this is what you could do too if you want to like delete an account from your chart of accounts, but it keeps telling you like it's not 0. This is how you can zero it out, okay, to move things around. We can't be digging into every single transaction. We're gonna have thousands and thousands of those, right? So this is a really great way to say, as of this point in time, I'm doing it this way. All right, hope you enjoyed that. If you have questions or a specific scenario you want me to talk through, just put it right there in the comments because there's many different things we want to change about our QuickBooks setup, so I'd be happy to help you with that. Feel free to check out all the free resources we have available at incomedigs.com. We are still accepting students into Real Estate Accounting Bootcamp as well. If you're interested at all, check it out. Free money back guarantee on that. We've been seeing a lot of success for those who have gone through the course. So we hope to see you in there as well. And you get to join me on live Q&A sessions as well. All right, so thanks so much. We will see you on the next video.